Hi everyone, Bowen from Enhanced Asset Management here. Just back to provide an update today on reporting season and some of the key portfolio holdings that have reported so far. So I've just got up on screen here my tracking sheet for reporting season so far, and just following the growth of the companies that are within our investment universe. So you can see here it's been quite a pleasing reporting season so far, and a majority of the companies that we follow have actually reported growth of above 10% for FY25. And even throughout FY26, what they've forecasted is this strong growth to continue. So we're seeing a majority report at least 10% growth for FY26, with some of the higher growth companies reporting, above 20, above 30% is what they're expecting. Now, this is an investment universe that has been constructed from years of research, both from Russell and myself. And, this is a list of really high quality companies that we're seeing report really, really strong results so far throughout reporting season. What we've seen off the back of these results has been a bit of a mixed share price reaction. We've seen some, head up north of 10, 15%. We've seen some perform a little bit weaker as they've run pretty hard into the result. But overall, we're really pleased with the way our companies have reported so far. And I've just highlighted in green all the companies that are held within the high conviction model. And a few of these are also held within the asset allocated models. And I'll just run through a few of these key results with you today. So we'll start with Codan, which is an Adelaide-based business, and they reported a fantastic result earlier in the week. So we bought this one back in April on the thesis that, we've got a really inflated gold price, and that would likely result in an increase in metal detector sales. They also operate a military communications business, and with the increased NATO spend and everything going on geopolitically with the military operations in Ukraine and Russia and in the Middle East, there was a lot of scope for growth in this segment of business. And we saw this play out perfectly in FY25. It was a perfect storm for the business. They grew revenues 22%. Both segments were really, really strong, both the military communications and the metal detectors business. And we did actually see an increase in margin, which resulted in net profit after tax growing 27%. Even more pleasingly, we saw FY26 outlook look really strong from the business. So they're expecting the communications segment to grow at least 15 to 20% in FY26 as this military spend continues to come through. This is an upgrade of previous guidance of 10 to 15%. And, this is a stock that has run really, really hard over the past year into the result. And you can see that spike up on the right-hand side here. The result even, it lit a fire under the share price, and it's up over $28 now. So I think we took the initial position at around $14, $15 back in April. So this is closing in on another 100% gain to match Zip and Life360, which we've had over the past year. Now, on the flip side of this, we had AGL Energy report some results that didn't quite live up to what we were hoping for. We were expecting profits and EBITDA to come down in FY25 before then picking back up in FY26 with a rising energy price, and as some of those renewable energy facilities started to come online. Unfortunately, the guidance for FY26 didn't quite live up to where we were hoping for it to be. We had forecasted around 660 to 680 of net profit after tax, which, whilst in their guidance range, this is a very broad guidance range that management have provided. So if you're using the midpoint of around 600 million, it undershot our estimates quite significantly. And due to this, we decided to exit our position in AGL. Now, I guess the benefit of investing in a managed account like this is we see the result on the day and we can make that decision instantly and pull the trigger and get the stock out of the portfolio, which we did on the day of the announcement. So we exited at around 880, 890. And you can see that the stock has continued to trend downwards, which, pleasingly for us, we obviously want to avoid these 10%, 12% sell-offs, but at least we can get out and preserve that capital before it continues to trend downwards, which it has. Now, back on a pleasing note, we had Zip Co report today. I spoke about they've already provided us with 100% gain since our initial purchase, and the company has continued firing, which is extremely pleasing. So they reported a 30% growth in transaction value for FY25, and that correlated with some significant increases in revenue, EBITDA, and net profit after tax. So, we're a little bit wary going into this result, just given some of their competitors in the US have reported recently and had some pretty soft market reactions to their results. But Zip, there's good luck finding something wrong with this result. Everything was working really, really well. Their bad debts are down, their margins are up, and the transaction growth is still there. And even better, FY26 is looking just as strong as what FY25 was. So they've started the year off with more than 35% growth in the transaction value in the US, and they've upgraded their net transaction margins and their group operating margins really strongly. And this one is now up over $3.80 since our initial purchase back in April at around $1.50. This one's done well over 100% now. And our valuation has lifted pretty strongly off the back of this update. And we continue to have pretty high conviction in Zip as a business and as an investment case still here. Even at $3.80, we can see this one having a really strong FY26. As always, this is general information only. If you do require any further financial advice, please reach out to your licensed advisor. We're still a week of reporting season to come next week with a couple of companies still left to report. We will update you at the end of next week with any portfolio changes or just providing some updates on how those companies have reported and what to expect off the back of it.